The correlation coefficient is a statistical measure that reflects the correlation between two securities. It can also reflect the correlation between a security and an ETF or a security and an index. It will tell you how closely one security is related to the other. It's positive when both securities move in the same direction, either up or down, and it's negative when the two securities move in opposite directions. Now let's say I wanted to compare Yahoo to the movements of the S&P 500. So let's go ahead and scroll down to the chart attributes area here at stockcharts.com, and in the indicators area, first of all, let's load up price. Okay, it's going to automatically load up the S&P 500. We want to put it behind the price. Go ahead and click update. And as you can see, it has a high correlation to the movements of the larger market. Now let's go ahead and scroll back down and load up the correlation coefficient. It is set at a standard period of 20-day look back period. We want it below the price. Go ahead and click update. And as you can see, anything above 0 shows a correlation in the movement. So this entire period on this chart, Yahoo was tracking the movements for the most part of the S&P 500. Right here it had a very strong correlation. The lines are almost exactly on top of each other. Right here, not so strong correlation, but still moving basically together. Okay? So the correlation coefficient ranges from a -1 to a +1. Anything above 0 shows correlation. Anything above 0.5 shows strong correlation, and anything below 0.5 shows a very wide divergence. Now let's say you're trying to find a stock that tracks the XLK technology sector. Okay, so what you would do is scroll down here, and in indicators, first of all, load the price. So we don't want the S&P 500, we want XLK here. We also want it behind the price, and then load up the correlation coefficient. And instead of the S&P 500, again put XLK, comma 20. That is the 20-day look back period. Okay, so AMD has a fairly high correlation to the XLK. A very strong correlation right here, and a very weak one right here and there. See how XLK goes way down and AMD runs flat. So there's not much correlation right here. Right here, XLK goes up, AMD runs flat. Not a whole lot of strong correlation there either. Okay, now let's say you want to check out some other examples to see if anybody can do better than this. So let's load up Microsoft. Okay, it again is for the most part correlated to the XLK technology sector. Very strong areas of correlation. Some pretty weak ones right here, where right here XLK went up and Microsoft actually it was going down and Microsoft was going up right there. So that's why this divergence here. And right here it was running flat and the XLK was dropping hard. So, but then they all started to move up together here. This was a period of strong correlation. Same thing here, very strong correlation. The trend is up here, and this looks very similar. Okay, a double bottom here, kind of a cup and handle double bottom there. Okay, let's look at another one. Oh, let's try Qualcomm. QCOM. Okay, for the most part, it is very correlated, except this one has a lot of gaps and kind of wild action. A little too expensive for my taste. But for the most part, it is strongly correlated to the XLK, with a reading of above 0.5 for most of the period on this chart. Okay, Intel, INTC, the computer chip maker. More correlated than not with 4 periods of no correlation or negative correlation. Don't really see this one. Okay, this one, it was stock going up, sector going down. This one was, it's hard to read that one, but a very strong period of correlation here. And then right here it goes really bad because XLK goes up and Intel gaps down and pretty much goes down. Okay, then it's starting to form a period of correlation again. So not so good there. Let's try Visa. Not sure why it's part of the XLK, but it's, you know, computer technology, banking. Okay, so for the most part, strongly correlated. Period right here, not so much. It was going up, yeah, XLK down, and then right here must have had some bad earnings to fall from, you know, $200 down to $170, and that was a definite period of no correlation. Okay, let's go with Dell Computers. Okay, Dell is got a lot of gaps here. It dropped here. The XLK goes up and it basically runs flat, so there's some periods of not real good correlation, and just not real happy with the way that Dell chart looks. It's kind of long wicks on these candles. Moving on. Applied Materials, AMAT, for the most part shows strong correlation above 0.5. This period of not correlation was sector running flat, it was going up. Right here, sector falling. No, it was before that. Sector running flat, AMAT going up. Right here, AMAT running flat, sector going up. So it's below 0.5 there. Okay, one more. NVIDIA, NVDA, the chip maker for computers. Mostly for displays. Very strong correlation. This one looks good. Good price range. You know, about $15. Good daily volume at noon. Well, it's actually about 2:30 p.m. today. So, you know, good volume, good price, good correlation. Very strong correlation above 0.5 here. Now let's say you're interested in finding one of the big chip makers that follows the movements of the overall market the closest. The first thing you would do is go down here into the indicators area and load up the price for the, let's say, S&P 500, because it's a broader measure than the Dow 30. Okay, we also want that behind the price. Click on correlation coefficient and then click update. Okay, this one doesn't look so good. Strong periods of no correlation. Next up is, let's go with NVIDIA. They make chips. A very strong correlation. That one looks pretty good. Let's go with their competition, AMD. Not as good. Okay, how about Texas Instruments, TXN? For the most part, yes, except for one period of not too bad, and they were moving kind of the same general direction. So this one's pretty good. Okay, RFMD, RF Micro Devices Incorporated. Yeah, some real strong periods of correlation, only one where it does not move, and here's another one. Okay, after some earnings, bad earnings or bad news, down, market goes up. Okay, so the correlation coefficient is basically for analyzing stocks on daily charts, monthly, weekly, things like that, to compare how they perform over a long period of time. But if you're a day trader, you're going to want to find a stock like Yahoo that tracks the movements of the S&P 500 almost perfectly with mostly strong correlation, because news that moves the overall market is going to move Yahoo in the same direction most of the time.